Okay, it looks like we're live. I'm doing the live stream an hour earlier today. I need to get up unusually early tomorrow. I'm flying to Miami. Yes, I'm going to be meeting Andy Shackman from Miles Franklin. We're going to do one or two podcasts over there. We're going to play some golf. Really looking forward to it. I haven't been to the States since 2010. And yeah, so I'm in Miami prob a lot longer than that. We used to go quite a bit to Miami when I was younger, in the 70s and early 80s, actually. So yeah, really looking forward to it. And I'm gonna meet an old friend from university in Florida as well. So there you go. Nice to see all of you here. I saw that Sonny Olafson said, "Good evening, Mario, from a cold Sweden." Yeah, I'm sure it's a lot colder than here, but it's pretty cold here as well. We are this morning it was like -5 uh, centigrade, which is probably around 25 Fahrenheit, which is very unusual for the UK. We do get cold days, but not for a prolonged period of time like we've had. So there you go. Uh, I see there's a lot of you here already. And as usual, I start a little earlier than scheduled, mainly to say hello to everyone. Uh, the topic today, uh, let me read it to you. It's the Gnome of Zurich says 2025 will be historic for gold and silver. Um, and I want to emphasize this is not my opinion of where gold and silver are going to go, even though it would be very nice if this were to transpire. But I think it's interesting to look at it, mainly because the Gnome of Zurich, and I'll come to what that means in about 8 or 9 minutes when we start. Yeah, the Gnome of Zurich is someone I met, of course, a couple of months ago in Zurich at a precious metals mining conference. He follows the channel, so it's very interesting. We're going to go through it. We've got Darren Smith, Quadman 72, Brady, Greg Mitchell, Doug Wilder from Fear, yeah, California. Things are not great over in Southern California. Uh, MIK is here. Dmitry Shmerkovich from Brooklyn. DL Bard, good afternoon from Chile, North Carolina. Yeah, I think Florida will be, from what I've seen in the weather app, it looks like it's going to be quite nice and warm. It's going to be like summer here in the UK. So I'm looking forward to that. That's, of course, Southern Florida. Sybil Faulty, Yoo-hoo Mario, Neil Hunt's Dynasty by Silver Platinum Crystallized Osmium. Yeah, 3 mics. That's for us in Canada. It's considered kind of warm, -5 centigrade. I know, I know. Even the golf course has been shut for a few days because it's a bit higher than London and they've got a bit of snow and it hasn't gone away. Uh, Twin John, did you find the French monk who wrote? Oh, I haven't. Sorry, I haven't looked at that. I forgot. But maybe I can find it. Uh, 1342, 13. Hmm. Yeah, I haven't. I'm sorry. I will look into that. I'm glad you reminded me. All right. Anyway, let's continue saying hello to all of you. Um, Richard King says greetings, salutations. John Helbin from Ohio. Nashville, Pastaman, 45 degrees. Jack Mahon, Mary, you should read The Fruits of Graft. Yeah, I have that book. I have quite a few books that I need to read. Right now, I'm reading this one here. His Hidden History, Secret Origins of the First World War. That was actually recommended by the Gnome of Zurich, and it's really good as well. So I'm reading this. I'm still trying to finish the Count of Monte Cristo. I started it earlier this year. I know the story, but I really want to read the book. Yeah, and I read a good as gold by Julie Shelton. I gave my opinion on her strategy to back the U.S. currency by gold. I don't think it's really goes far enough, and that's probably why I haven't interviewed her. I've been in touch with her for a few years, but yeah, I mean, I wouldn't mind having her on, but I don't think it goes far enough to make to change things. Mitzi Lawrence from London. I think gold is going for gold. Yeah, it certainly looks. Unfortunately, it looks like. Well, it's fortunate if you have gold and you've been stacking and you have the wherewithal to keep stacking. But I think it's a bad signal about how the way our currency is going, and the cost of living is just going to get worse. And it's not only going to happen here; it's going to happen in the U.S. and Europe, everywhere around the world. The World Island, Spock 2024 is reading. Quadman 72. Yeah, Alexandre Dumas, the author of The Count of Monte Cristo, one of the greatest. I agree. Grumpy one says Trump, Trump, then slingshot to new all-time high. Irish luck from New South Wales in Australia. Justin Taylor, I was born in Amersham and raised in Chalfont, St. Peter. As Ascanius, Chow Mario from Canada. Sybil Faulty, I don't worry about the VAT on silver in the UK. The first time I bought silver, it was just under £4. The VAT was, I think, 17% at the time. Yeah, I kind of didn't like that, but now the price of gold is at 25. It doesn't matter. With what I think a price of silver, sorry, is at near £25. I don't think you should worry about it. Uh, yeah, it shouldn't put you off. Darren Smith says, yeah, I saw that he did interview Judy Shelton. It's not Julie, but anyway. Mike Korn is in sunny Sacramento. Yeah, Sacramento, California. Nikki Patel says some latency in the sound. Yeah, I don't know what's going on. Let's have a look. Well, I don't think there's much I can do about it. It seems that the connection is good though. Government eventually ruins absolutely everything. That's no now is evol evolution. I agree. I mean, big government is like a is what we have right now. Unfortunately, historically, we go through these cycles. The only thing that's encouraging is that I think we're near the end of this Leviathan government, big government, hopefully. Irish luck, have you ever incurred a tax for gold coins from Australia? Nope. No, I don't know. I think I bought a gold coin once from the Perth Mint many years ago. There's no tax that I remember of. Frank Kavidja, thank you for the super chat. What do you think is the cause of the record short on PSLV? You mean SLV, I think, not PSLV. Force majeure LBMA COMEX on silver this year. It's possible. I think LBMA is much worse than COMEX because in London, in the LBMA, is you can hypothecate as many times as you want. COMEX, there's a limit to how much you can leverage. Yeah, I mean, I spoke about that in my interview that I posted yesterday with David Jensen, and highly recommend his Substack. He covers it in much more detail than I do. And Durarama, I enjoyed the show with David. There you go, David Jensen. Norbert says the VAT makes the product more expensive, therefore you can recoup it when selling privately on eBay. But my thing with silver is that I think and we're going to see it now. We'll start now. I think silver is so undervalued that when silver is at 100 or 200 pounds an ounce, and I think that will happen. Will you really be concerned that you paid 30 pounds instead of, I don't know, 27? I don't think so. It's a bit like me when I paid for 3 pounds 80 for an ounce instead of 3 pounds 50. Yes, I wasn't happy about it, but now that we're at 25 almost, I don't care about the VAT. There you go. And if you don't like that, you can always, yeah, try to buy some of the silver miners. That's the other option. But you need to try to do it through a tax efficient way, like an ISA, because I could see a lot of capital gains coming from those as well. Not joking, Mario. Hope you are well. Currently living in my van up in County Durham. Super cold. Stacking, learning, and waiting for the coming chaos opportunity. Been listening to you for 5 years. Nice to hear from you. I think we are entering a chaotic time already. I mean, what's happening in LA is just amazing. In northern, I think it's north of LA there. Uh, apparently, the the area that's been affected and burnt down is the size of Manhattan. I mean, it's like really it's biblical, if I have to say it. So. Let me reread here the topic that we're going to cover today. And I might not do an hour because I need to go to bed early tonight. It's the Gnome of Zurich says 2025 will be historic for gold and silver. So first of all, let's look at the term, the Gnome of Zurich. And why am I using that term? Well, because the gentleman that I met at the mining conference, Precious Metal Summit, in November, beginning of November in Zurich, he saw that I was coming and he asked the organizers to put me in contact with him because he watches the channel and he wanted to meet me there. And really nice guy. And we spent a lot of time looking at charts. He was talking to me. As I said, he recommended this book. He's a retired banker from Zurich. And But he doesn't want to come on. He's a very private person, and he doesn't want to give his name. So I said to him, I'll say it's the Gnome of Zurich. And what's the Gnome of Zurich? Well, back in the 1960s, we had the London Gold Pool, which is when the major central banks of Western Europe were coordinating, manipulating the price of gold to keep the price of gold from going above $35 an ounce. Already then, they were manipulating it, capping it. Um, uh, of course, the reason they had to do that is because the US was spending and printing too much, borrowing too much for the Vietnam War and for Lyndon Johnson's Great Society program. So I think it was 1968, the price of gold, they lost control of the London gold pool. The French left the London gold pool, and the price of gold went went above 35. They lost control of the price. So what the London boys did, the because it's still to this day the center of London bullion trading in the world, they closed the market. Yeah, they closed the market because they're defending the Bretton Woods system. And let me just have a glass of water, sip of water. So they closed the market, and you'd think, why would London close the market to defend the dollar? Well, if you look back at Bretton Woods, the British and the Americans, they were the major drivers of that system. But yeah, so they closed the market to get control back of the gold price to drive it back below 35. But the other big center of gold trading, Zurich, uh, they didn't close it. They kept trading. And one of the Chancellor of the Exchequer here in the UK, or the Finance Minister, uh, they weren't very happy here in the UK, and they said, well, the gnomes of Zurich have kept the market open. So it's a derogatory term, and it's stuck. You know, the gnomes of Zurich. They're the bankers from Zurich who, yeah, didn't help out. They're based in Bahnhofstrasse, which is the main business street in Zurich, and so I said I'll use that term. So he showed me a lot of charts, and I'm going to start with a chart of the gold silver ratio that he gave me. And I've scanned it, and I've got it here for you guys. And the thing about the Gnome of Zurich, my friend, the Gnome of Zurich, and he's a really nice guy. We talk regularly now, and we have an app. It's not WhatsApp, it's a Swiss app that actually is very safe. No one can interfere with it, but that's a different story. So he likes to do very long-term analysis, and I'll come to what kind of analysis he does usually. But I thought this was really interesting. This is the gold silver ratio going back, well, 3,500 years. It's a long time, to 1500 BC. And one thing you notice though is that it uh, it's always up until the late 1800s, it always held below 20. So pretty much around 15, 16. So what happened here? Well, we're told, of course, that it was because of the Great Crime of 1873. That's when the US demonetized silver, and that's partly true. But the real reason why they demonetized silver, and this I have to thank the Gnome of Zurich. He also loves reading history, is because of this guy here. And you probably have never heard of him. And I hadn't really heard of von Bleichroder. So Gerson or Gerson von Bleichroder, he was a banker to Bismarck, who was basically in charge of the Prussian Empire and the German Empire in the late 1800s. And so what happened in 1873, it was 2 years after the German Empire defeated France in the Franco-Prussian War. They had a lot of gold. They did really well out of the war. Of course, they won. Napoleon III had to abdicate, and he actually came to live in the UK for a couple of years. He lived actually near where I used to live in Chislehurst. Uh, he lived in this quite a big mansion that is now a Chislehurst Golf Club, but that's beside the point. But you can see here that the Blackroder banking house maintained close contact with the Rothschild family. Uh, what a surprise, huh? What a surprise. But so what I'm gonna tell you now is what the Gnome of Zurich told me about Blackroder. He advised Bismarck, Otto von Bismarck, to sell a lot of the German silver, and up until then, gold and silver were used in the system. It was a bimetallic system, and as you saw by that chart earlier from the gold silver ratio, it was really stable. But this completely destroyed the bimetallic standard, and the Gnome of Zurich thinks that it was a manipulation. Uh, the Rothschilds were involved, probably, and the Blackroders. They sold the silver and they made a fortune. And that's one of the reasons why America had to leave had to demonetize silver. They completely screwed up the system, pardon my French. So that's what happened. And the Germans were behind it. And the bankers, so it's not surprising. I have a super chat from Stephen Montplaisir. Thank you. Thank you, Mario. Stay safe in Jesus Christ in the middle of a conquered land. Thank you. That's nice. Silver Task, great to see gold price in pounds sterling. Yeah, it's over 2,200. Which is yeah, and I think we have a lot of room still on the upside. So we've gone through the gold silver ratio, and why did I do that? Well, because then we can understand the predictions. And I said the Noma Zurich likes very long-term charts, and the other fact or thing about the Noma Zurich is that he looks a lot at Elliott wave technical analysis. So for those of you who don't know, this is Elliott wave principle. And the major thing about Elliott wave is that things happen there's five waves: first wave, second wave, third wave, fourth, and fifth. That's all I will go through. And usually as well, let's see here, in the stock market, the third wave is always the strongest, and the fifth wave is similar to the first wave, but in commodities, it's the other way around. The fifth wave is the strongest. So keep that in mind. That's Elliott wave analysis. And the grandfather, or like the founding father, kind of aside from Elliot, the guy who's really publicized it here in the last 34 years, been Robert Prechter. Robert Prechter, and one of the things that the Gnome of Zurich said is that Robert Prechter is aware of the chart that we're going to look at now of gold, but for some reason he's always bearish gold and he doesn't understand that. But anyway, here we go. I said he likes long-term charts. He's not just looking back to the 1970s. He's looking back 300 years. And he's got some wave counts here. So notice there's a little bump here, a bump here. This is the War of 1812 between the US and Great Britain. So that's like a wave one, and then wave two, and then wave three, four, and five. He didn't do that count, but this spike here is the Black Friday incident in 1869 when the price of gold went to 100 and I think $62. So here we go. That's the gold panic of 1869. So the gold price spiked massively to like $162. Yes, these two guys here, Jay Gold and Fisk, and Jim Fisk, they try to corner the gold market. I think one of their wives was, here we go, Gold and Fisk schemed to convince President Grant, who they knew socially via his brother-in-law, to halt the sales of gold. So they try to corner the gold market, and it led and it let's see, and it led to this spike in the gold price, and then the US Treasury came and sold gold, and that completely collapsed the gold price back down, and the stock market as well. uh, there's panic and pandemonium, not just in the gold market, but the whole of Wall Street. So that was the original Black Friday. So for the Gnome of Zurich, that's the first wave, uh, first major wave here. And this is in terms of let's see, not Fibonacci. Let's go Elliott wave again. So yeah, what we're looking basically is a grand super cycle, multi-currency, right? So that's the first big wave. That's the Roman numeral one. And the second one is actually for it's here, 1934. That's when gold was revalued from $20.67 to $35. So that's the bottom here. And and that was from 1869 to 1934. That's wave two. And we've been on wave three. Uh, on this count since 1934. And the other thing the Gnome of Zurich likes to look at is the Fibonacci sequence. I'm not going to go through the Fibonacci sequence, how you derive it, but many of you might know it. But 89 is one of the Fibonacci numbers. And what the Gnome of Zurich told me, because of all his analysis of gold and silver, is that gold trades very much to the Fibonacci numbers. So if you add 1934, if you add 89 to it, you get 2023. And he expected uh, the top of wave three uh, to be in 2023. So why hasn't it happened? Well, I think it's because the bankers have been kind of controlling the price, suppressing it. But he thinks that wave three is going to top this year, and he sees a major move, the final um, move up in wave three. We're gonna come to some prices in a minute. Excuse me. Uh, yeah, wave three. So, and then there's this other count here. Excuse me. That's a bit more short term. It's from the low in 1934, 33 to 34. That's wave one, from $20.67 to 35. And then we go to wave two. That's 1968 or 71. And then wave three is the top in 1980. Wave four is the bottom in 1999. And he told me that, yes, the 2023 hasn't worked because of suppression, manipulation. But if you go to this wave four, and you add 26 years, you get 2025. And if you divide 26 by 2, you get 13, which is a Fibonacci number, as you can see here. So he thinks gold will explode this year, basically. And he did some analysis of the moves here in the 1860s, and gold was up 5 times at one point. And then in 1970, well, from 76 here to 1980, it was up 8 times. So that's 5 and 8. And if you look at Fibonacci, 5 and 8, right? What's the next number? 13. So if you don't look as far back as past the far further back than the 19th century, you wouldn't have seen this. A lot of people expect gold to make an eightfold increase from 1,050, which was the low in 2016. People like Michael Oliver, for example, which would take gold to around 8,500. But the Gnome of Zurich expects 5, 8, and now 13. So if you do 13, and I've got it all written down here, times 1,050, you're going to get 13,650 gold. That's what he sees this year. Am I saying, is that what I see? No. I mean, I'm happy with gold going to 3,500. So where does he see silver? And let's bring up the silver chart. Well, he's done some different analysis here. And the other thing he said that silver trades not by Fibonacci numbers, but by the Lucas numbers, which prior to meeting the Gnome of Zurich, I never heard of the Lucas number. But the reason why he's looked at the Lucas number is because the low in 2003 in silver was around $4, right? $3.50 or 4. And if you add yeah, 2000, that's 22 years to 2025, and 22 divided by 2 is 11, and 11 is a Lucas number. So you might be yeah, you're probably waiting for his forecast for silver this year. Well, he's just taken the gold forecast 13,650, and he divided it into 16 because that's the average gold to silver ratio through history, and he gets it $853 silver. So, and is this So let's stop here, and now you can ask me questions, and I'll try to talk about what he thinks one should do. If this were to happen this year, we need to be prepared also, not just for the market going down, but for the market spiking as he thinks. And why would it happen? Well, I think it would happen because the currencies are in free fall. Central bankers have lost control. The system is under threat or has a collapse, and they have to come in and do massive QE. It could be because of that. So I have a super chat here, very generous from Gary Hardy. Thank you very much. Uh, it says, "Are you speaking anywhere in Miami this week? Wife and I will be in Deerfield 14th to the 18th. Would like to see you speak in person." Um, well, I'm going to be with Andy on the 13th, 14th, and 15th. I think we're going to be doing a live stream with a few other people. And then I'm going back to, he lives in north of Miami, Delray Beach. and then I'm gonna go back to Miami, spend the night there, and fly out on the 16th in the afternoon. So I'm not going to be speaking anywhere in a public place, but you can contact me via, there's an email on my YouTube channel. Send me a message and maybe we can get in touch, Gary. That would be nice. Maybe we can meet up. Um, yeah. Elka says, Monaco 60, we're getting younger every day. Oh, thank you. Um, so, um, yeah, those are massive moves, aren't they? 13,650 in 2025. As I said earlier, I'd be happy with gold going to 3,500, for example, or silver going up to 50. This is just like, yeah, this is massive. Uh, it's possible, though. It's possible. Uh, that's what the Gnome of Zurich thinks. And the reason why I'm talking about this is not to push gold or silver, because all of you, or most of you, know that since I started this channel, I've been saying that you need gold and silver as an insurance against currency debasement, and I still see it like that. So I'm not too concerned about the price. Uh, what I'm concerned is purchasing power. But what the Gnome of Zurich said is that he thinks um, that because we're in the super cycle, one, two, we're in the third leg that started in 1934, but and the fourth leg, a correction, the fourth leg is usually, he says it's a running correction. So, for example, he expects gold, if it goes to 13,650, to correct, and it won't be a long correction in terms of time. And he doesn't see it being a very deep correction. It's not going to go back down to 2000, for example. He thinks it might go back down to 11 or 10,000. And then leg five, which he thinks is also going to culminate in 2028. So this is really, I think, a hyperinflationary cycle, because it took from 34 to, let's say, 2025, if it happens, 80, well, 90 years or so for this third leg. And then the whole thing, uh, how can I say, happens in like a few years. And leg five, as he said, for commodities are even greater. And when leg five, in his opinion, uh, tops in 2025, that will be the end of, yeah, the dollar and all fiat currencies will be gone. I don't know what kind of price he's looking at. For silver, though, he thinks that if we go to, what's the level here? 853 this year, that it could correct much deeper than gold. So he said he would sell his silver if it gets to that level. Am I going to sell my silver? Maybe. It depends if it happens, of course. But he thinks it could correct like back down to 400, or even 200, which is still a lot higher than we are now. So that's how he sees it. So I'm gonna, what else did I took some more notes here. Some of the other things he talked about, for example, he's very bearish the stock market. He looks at, if you look at the New York Stock Exchange, it was created in 1792. Some of you might have heard of the Apple Tree Gang. They were brokers who decided to form, yeah, to organize a market, and that's when it was created. And he said if you add 233 to 1792, you get 2025, which is a Fibonacci number, the 233. The other thing he talks about is the Pluto cycle. It's a 248-year cycle. And if you add 1776 to 248. You get yeah, 2024 to 2025. So that's very interesting as well. And it all seems to be coinciding with his Elliott wave analysis of gold and silver. So I'm going to stop here. I hope you enjoyed that. And one of the things that's interesting, uh, I'm going to the States tomorrow, and I bought some Federal Reserve notes, as you can see here. And I got quite a few 20s and 10s, some 50 and $100 notes. And one thing I noticed is that, with the exception of two or three, they're all signed by Secretary of the Treasury Steve Mnuchin, who was, if you can see here, Steve Mnuchin, who was Trump's Secretary of the Treasury. That's a $20 one. And then another Mnuchin signature. And I was wondering why all these Mnuchin notes? Well, I'll show you why. And it just goes to show that yes, the Biden administration, they spent like drunken sailors, but most of the money printing that we've seen since 2020. Let's have a look here. I'm going to share this with you. This is my theory why I'm seeing so many Mnuchin notes. So you see, February 2020, Mnuchin was Secretary of the Treasury, and M1 went from like four trillion, around 4 trillion, and by let's say January 2021, it had gone up to 18 trillion. So what I'm trying to say here, yes, um, we can blame the Biden administration, and I think they did a lot of wrong things. But shouldn't we also blame all this money creation here? And it isn't, uh, let me, isn't this proof that I only see Mnuchin signatures? That, yeah, a lot of the money printing was done in 2020 up until beginning of 2021, 4 trillion to 18. The thing is, most people don't look at inflation as the money supply anymore. They look at CPI. So what I'm trying to say here, yeah, um, the blame is yeah, it's for both administrations, and that's why I think gold and silver are going to continue to go up. I don't see the Trump administration trying to rein in inflation. He said the other day that rates are too high, giving the Fed a hint. So there you go. Am I saying that things are not going to get better? I don't know, but I think the choice of Trump and what's going on now is a lot better than what we had before. And a lot of you know that I try to be apolitical as well. I always tell people you should look after your own affairs and not try to depend on anyone. But yeah, there you go. Indurarama, thank you for your super chat. Uh, Mary, apart from the technical analysis, is there an event, debt crisis, liquidity crisis, bank run market that the Gnome believes will trigger? Yeah, he thinks we're going to get hyperinflation. So, the fundamentals, the debt, right? It's all about the debt. And he said it could be even more than 13 times. It could be crazy. It could be crazy. There you go. Mangala Raj, will Trump make it worse? I don't know, but I don't think Trump can stop what's coming. What I think Trump will be doing is trying to bring things back together to rebuild. That's the way I see it. I don't think there is any way to stop what's coming. And why? Well, because the debt is so huge. And yeah, and the bond bull market's finished. So interest rates are going to tend to keep going up, bond yields. And the only way to stop them going up would be yield curve control or more QE, which is highly inflationary. Big Push Ape, thank you for your super chat. Treats for the pup. Yeah, he's gonna miss me, but his mom will be here, and yeah, there he is. Dimitri, thank you for the super chat. Did treasuries crash in '08? I think this time is different because treasury issues are so important. No, treasuries didn't crash in '08. They might have temporarily, but then they instituted QE, and let's have a look if they crashed. I mean, I should know. I was in the markets at the time and I traded the bond market, but you kind of forget sometimes. Let's. I'm going to bring up the 10-year yield. I don't think treasuries crashed in 2020. They spiked higher the prices and then they collapsed and they had to do QE. But let's go back. Let me bring a chart here of long-term chart of the 10-year yield. Let's go back to 2008. I'm going to share it with you guys. So this is the yield, not the price. So let's have a look. 2008. So you see, uh, yeah, the yield dropped from 3.9 Uh, to the end of the year, it dropped to 2.1. So treasuries didn't crash. The yield crashed. Treasury prices went up. And then they announced, and then it started going up again, and they had to announce QE, of course. I think they announced QE around here. But yeah, it was very volatile. Like we went from 4% to 2%. Then we went back up to almost 4%. But, that bull market was still around since as you can see here, yields are still going down and down and down. And I think if you draw a trend line here, let's bring this here. This is what, in my opinion, this is when the bond bull market finished, the 40-year or so market, bond bull market. And why bull market? Well, because prices had been going up, yeah, long term. Now yields are going up, so prices are going to go down. Yes, we could see a correction back down in yields, which would be positive for bonds. But I think we're very close to breaking out. But I think the Fed might step in if we break above 5 or 5.25, and they'll say we're going to do yield curve control, which means that they'll say we won't let the 10-year yield go above 5.25%. And that in itself will make the market go in and buy the treasuries. Yield curve control doesn't mean they're going to do QE. They only do QE if the market tests that 525. If it goes through 525, they'll have to come in and buy. But I think that will be massively bullish for gold if they announce any kind of program to start yields going up. So, any more? Let's have a look. Oh, Andrew Watson, thank you for your super chat. Have a Budweiser on me out in the States. Thanks. Thank you. Budweiser. Old Milwaukee. I remember Old Milwaukee. Um, so yeah, I'll take some questions now from you guys. Yeah, and yeah, let's stay till 9 o'clock. Why not? Elka says Trump is old. Can he go 1 year, much less 4 years? I think he's in pretty good shape, Trump. I mean, I've watched some of his golf games on YouTube. He's a very good player for his age. So I don't think he has a health problem, to be honest. And I think he's in much better shape than Joe Biden. Scott 49 140. Have you seen derivatives on the debt clock has reached 721 trillion? No, I haven't. I mean, I'm not surprised. And I think that number is a lot higher than 721. And why do I say that? Because there's two kinds of derivatives. There's the exchange traded derivatives, like on the CME or uh, Euronext in Europe. Uh, and those are kept track of, and it's public figures. But the biggest derivatives market is the over-the-counter market, which is traded amongst the big banks, the big corporations, big hedge funds. And we have no idea how many trillions, hundreds of trillions or quadrillions in bets they have. And I think it's a great shame because it was derivatives that almost brought down the system in '08, and they did nothing to ban OTC derivatives. Why not? Well, because the banks have a strong lobby and the politicians are clueless and they do as they're told. But yeah, there you go. Marco Masseria says Trump is powered by steak and ketchup. I like steak as well. I mean, yeah. Not sure about ketchup with steak. I prefer like horseradish or peppercorn sauce. Dave David Stop says a banker bought my vintage Rolex. What does he know? Well, he knows that, yeah, the currency is going to, yeah, devalue further and further. Uh, and I don't, that's why he's buying things that hold their value. Um, or maybe he also liked your watch because he liked it. Johnny Marbles, I agree with you. Yeah, he does. He's not like the usual politician, and that's why I think a lot of people don't like him. But enough people liked him for him to win again. One species says, Mario, I sincerely thank you for this show. Oh, you're welcome. Milky Porridge Trump powered by full fat Coke. There's an interesting thing about Coca-Cola. Most people think Coca-Cola is very sweet, and that's true. But the worst thing about Coca-Cola is that is very salty. It has a lot of salt, and that's why they put sweet. That's why it's so sweet to hide the salt. But what the salt does, it makes you thirsty, and it makes you want to drink more. That's the problem with it. I've stopped drinking like Coke Zero for over a year, and I just drink water now. Coke Zero and Diet Coke, they're just as bad because they have aspartame in it. But I mean, Trump is 78 or 79 almost, I think. So he seems to be doing well. My mom is going to be 88 in February, and she's been smoking since she was 13. So yeah, you never know. You never know. What is the Gnome of Zurich? Well, it's a nickname the Chancellor of the Exchequer in the UK used for the Zurich bankers in the 1960s, basically because they wouldn't do as the bankers in London wanted. The bankers in London closed the gold market because the price was unraveling, but the bankers in London kept trading, and and they call them the gnomes of Zurich. And the reason why I'm calling my friend in Zurich the gnome of Zurich is that he doesn't want to disclose his identity. So I said to him, I'll call you the gnome of Zurich, and he laughed and he said, "That's good," because he knows the history of the term. Someone get a welfare check over to Patrick. He's off his meds. I don't know what you're talking about. Uh, Thomas Moran, if you had to pick one one out of gold or silver to invest in right now, which one would you pick? I'm big on silver at the moment, bigger upside in my opinion. No, I agree. Um, I always like to buy both. I guess you can buy more silver, of course. You can buy 50 ounces of silver much easier than you can buy 50 ounces of gold. It costs a lot less. And also with silver, uh, yeah, you can also if you don't want to have the physical, which I don't recommend, you should have some physical, but if you have a big amount of fiat and you don't want to get all that volume of physical, you can also go into the silver miners, the producing silver miners, and also maybe those explorers that are almost about to start producing. Marco Masseria, Mario's 6'7". No, I'm not. Um, uh, I think what's his name? Barron Trump is about 7 foot or 6'10", isn't he? I'm not sure why it matters how tall I am. There's someone that keeps asking that. Anyway, I'm not 6'7". Uh, what's better, silver or freedom? Well, freedom, of course. Um, yeah. I mean, with freedom, but you can only have freedom really if you have sound money, like gold and silver. It's one of the reasons why things have gone downhill in terms of individual freedom is because we have fiat currency. But what I think silver will do and gold, even in a draconian world, is that it will help you keep a bit of your freedom, hopefully. Yeah. Echo, echo. Thank you for your super chat. Says, love your content. Glad gold is still not something everyone talks about yet. I think that shows not in the bubble. Well, I don't. The thing is, uh, yeah, it will be in a bubble. That's when, like the public starts to pile in. But it could be kind of different this time because if the fiat currencies like go away, you don't really want to get rid of your gold or silver physical. You might want to exchange them for another asset because they'll have huge purchasing power. And the miners is different as well because they're very cyclical. So you might want not hold on to your miners as a long-term investment. You might want to take your profits in the miners. Malice, Lone Wolf, what do you put the true fair value of gold and silver at currently? Well, if you do 40% of M2, it should gold should be around, I think, $28,000. So, um, and why 40%? Well, because that's what that was the gold cover used uh, back in yeah, during up until I think 1934. and I think there was a 20% gold cover up until 68. So 28,000 uh, divided by 16 to 1. So yeah, and silver should be 1,750. That's what I see. So 28,000 and 1,750. Silver Task, one of the moderators, thank you for being a moderator. It says 642 likes. Um, Wojak, sounds like a Polish name. Number one is drinking vodka right now. Great time to stock up. How do you invest in popcorn? Uh, buy a buy a buy a farm? Wayne Wentworth, thinking about selling my ETF silver holdings and buying physical, but hate having to pay the VAT. Well, yeah, you will hate it more when if the ETF uh, goes under and you get paper. You hate that even more. Thomas Moran, do you feel that the rising gilt yields could be a serious problem for the UK? Of course. I mean, I've been speaking about that this whole week, Thomas. It is a massive problem. Uh, it's crazy how much our gilts are. Yeah, it's much higher than the rest of Europe. Yeah. Paul Bishop, you can buy gold bars at Costco? Yeah. Yeah, I heard about that. Unreal says, Mario, thanks again. I think the 8 p.m. is better than the 9 p.m. Yeah, it's better for me as well because it's not as late. 9 o'clock is a bit late, and by 10 o'clock, I'm already feeling quite tired. Malice Lone Wolf, do you think Bitcoin and other cryptos are merely precursors for CBDC? Uh, I actually think it was a backdoor way of having the public uh, build the infrastructure for CBDC. So the powers that be are really clever, and they came up with this white paper, and they made it public, and the whole infrastructure was built by the private sector. But I'm not sure about Bitcoin, how it will react. Bitcoin hasn't been around for 3,500 years like silver or gold. So I don't know. And for me in the UK, having Bitcoin is not tax efficient because capital gains tax, the threshold is £3,000, while coins of the realm like gold and silver coins, there's no capital gains. So yeah, that's one thing that I would be one of the reasons why I didn't go into Bitcoin. And the other reason is that I don't really trust uh, because I don't really know who's behind it. We are told it's Satoshi Nakamoto, but I've heard it could be even that it could be the deep state, the intelligence, DARPA, and all that. But that's another topic anyway. Uh, and Riwa and Rirua, what a crazy world we're living in. 10% of either of your precious metals. Yeah, the 10% is still impressive. Yeah. Echo, echo, if you have 3,000 pound profit outside an ISA okay, then take the profit before the end of the next tax year. Yeah, but let's say someone invests 100,000 in Bitcoin and it doubles. That's the profit there is 100,000. It's much more than 3,000. So make sound money great again. Let's hope so. Um, Road test, does the Fibonacci cycle correlate with the turnings, as in the fourth turning? Well, it definitely the Elliott wave analysis that the Gnome of Zurich did do correspond with the fourth turning because we are right now in winter in the fourth turning, and I got that book as well, the latest one. And is it Neil Howe thinks, yeah, by the early 2030s, yeah, it's going to be the end of the winter. So things are going to be very hectic and chaotic. We're already seeing it, not just economically, financially, but also politically, geopolitically. And yeah, 2028, I think, is kind of right in the middle of everything there. And it could be an interesting date. Ballet Dance Rava says gold going to 3,000, silver to 1,000. Um, Definitely, but I think if silver is at 1,000, gold will be a lot higher than 3,000. But who knows? Scott 49 110. Let's see. Let's have a look at your super chat. Maybe I missed it. Sorry. Oh yeah. Sorry about that. And thank you for that. Have you seen the FDIC came out with the unrealized losses of 364 billion, up from 170 billion? I hadn't seen it. I mean, I follow that. I started following that when John Titus, he came on my channel just a month before the banking crisis in 2023 started, and we were looking at that. So I'm not surprised. I think but I think the fourth quarter numbers, they only come out sometime in February. So I think we need to look at that one. And that's a huge problem, these unrealized losses for the banks. And they're going to get bigger probably even in the first quarter now, but we have to wait quite a while for them. And why are they going to get bigger, in my opinion? Well, because bond yields are uh, rising. And when bond yields rise, bond prices drop, and a lot of the banks, they hold bonds, and also the smaller size banks, they also hold commercial real estate loans, and that's not doing well. So I think that's why the Fed's going to be really concerned, as I said earlier, with if the 10-year yield goes above 5%. I saw one of you said 4.8. Well, we're very close to 4.8, but I think they might put it at 5 or 5.25, the yield curve control. Hannah says David Hunter thinks gold will go to 20,000 and silver to 500. Yeah, that's fairly similar to the Gnome of Zurich. I mean, um, it's possible. Yeah. Gary Hardy, Mario and I drink the same Kool-Aid. Andrew Brown says, remember to give Mario and Rudy a like. Rudy's been the last couple of days, we've had a fox out in the garden, and he gets really aggressive, Rudy. Of course, we didn't let him out when the fox was out there. They're dangerous. But yeah, he's a good guard dog. Well, yeah, M Malice Lone Wolf. Uh, yeah, Silver will has always outperformed gold in the precious metals bull market. It did so in the 70s. It did so in 2011. The thing is that it takes a little, it always starts outperforming with a bit of a delay. Like the Gnome of Zurich said that the bottom in gold was 1999 and the bottom in silver was 2003. So there's a little lag. And the same thing happened in the 70s. Gold started going up in 76 or 77, while silver flatlined until 78, 79. So yeah, I think silver will outperform. So we've got a minute left here. Um, and just take one more question from someone different. Uh, Over here, Mario, you have a fox in your yard. I have rats running around here in New York City, the four-legged kind. What about the politician rats as well? I'm sure there's a lot of those too. I'm going on my own, so my wife will be with Rudy. Yeah, so there you go. It's more of a business trip, really. So there you go. Not joking. If we all pool 100 pounds each, I wonder how much silver we could control, leverage low. Why not start a fund? Well, I mean, that was one of the purposes of the silver squeeze movement in 2021, and I think a lot of people bought physical silver, but you know, the futures and the LBMA market, they came in with massive paper shorts, and they when you suppress the price uh, artificially, you put people off. But I think that's you can't do that forever because, and I think especially now with countries like Russia and China and others wanting real physical silver. Uh, Nate B is off to Rio next week. Yeah, it's a good time to go to Brazil. The Unfortunately, the real is very weak, and that, of course, is where I'm originally from, Brazil, Rio, the Rio area. But I haven't been there for a while. So anyway, um, what's going to happen in terms of videos? Well, tomorrow I've got a really interesting interview uh, that I'm publishing at the same time as usual, and then also on Tuesday. So you can listen to those too. The one on Tuesday is with John Perez, and tomorrow's one is with Vince Lancy, who is from VBL goldfix.com on Substack, and I follow him on Twitter. He's got some very interesting things to say. And what about Wednesday? Maybe Wednesday I'll do a video from the US and publish it, which will be interesting. So there you go. Thank you all for being on the live stream and participating, and thank you for all the support, all the super chats, and all the comments, and just being here. And yeah, I'll talk to you later. Take care. Bye.